Members, due to the holiday weekend, we are just going to do a quick recording of our week ahead webinar. Just a brief look at last week. We did have a lackluster holiday week following a strong end to the quarter. On Friday, yet again, we had the employment report, which as well came in basically lackluster, showing gain of 236,000, the 27th straight month of job growth. Unemployment rate did tick lower to 3.5%. One factor that did show a change was the participation rate, which did increase, which shows more people are coming back into the job market, which could signal a decrease in wages as the supply of jobs decrease and the demand for jobs increase. Futures ended on Friday slightly green, and we await Monday's open. Crude oil strength continued back to that $80 level as OPEC announced a surprise plan to cut production. Yield markets weakness continued as the 10-year yield continues its drop from earlier highs above 4% to end the week at 3.29%. Gold continues its strength above 2,000, which we've been discussing for numerous weeks as a level to watch. We'll go over that on the charts later on. Next week, we have the start of earnings, with top banks reporting on Friday. Expectations on the earnings front are low. Analysts are looking at an earnings decrease of 6.8% compared to last year at this time. Next week as well, we have a flood of economic reports. The CPI and FOMC minutes on Wednesday, jobless claims and PPI final on Thursday, retail sales, import and export prices, industrial production, and the consumer sentiment on Friday, all in play this week. Members, keep in mind, we also have Fed Speak schedule on watch. One thing we always mention is to always take a barometer of the economy for any long-term investment decisions. We have an economy with a very strong labor market, yet most of the other underlying economic reports are showing weakness across the board. We have Fed speakers who continue to mention how high inflation is and that they expect a higher than above 5% print that stays around for longer than usual. Market participants, though, believe the Fed will cut rates this summer. We have one of the most followed and respected bank CEOs, Jamie Dimon, coming out with a warning that, in our opinion, not many even took a second notice to this past week, hardly even mentioned by media. And at the end of the day, when we take a step back, inflation rate is still out of control. We're going into a time in the markets where we usually have a very low volatility during the summertime. Do we follow the old adage, sell in May and go away? If we do, we have one more month to get an idea of what is coming for the summer volatility. If previous months can show and tell us about what's coming, we expect a lot of volatility during the summer and even more going into the end of the year. Earnings, economic data, Fed Speak. Watch them this week, as it is a very busy week following that slow holiday week we just had. A quick look at your week ahead report. As you can see, members, we do have some top earnings, which are the banks coming in on Friday. Some very expected to see the results following the recent bank financial crisis, I guess you can say. We have Citigroup, C, JP Morgan, JPM, Wells Fargo, WFC, the top banks reporting this Friday. On Monday, Fed Speak Williams. Tuesday, Fed Speak Goolsbee and Kashkari. We also have your WASDE report and your EIA short-term energy outlook. Wednesday, Fed Speak Barkin, US CPI and FOMC minutes. Thursday, jobless claims and the PPI final. Friday, Fed speak Waller, as well as a slew of economic data with retail sales, consumer sentiment, and that all important Michigan 1 and 5 year inflation expectations. Remember, back in the day, that number was not even being discussed when we were going over economic data. But since inflation is so important, that number will probably be one of the biggest numbers following the CPI report this week. Company events for the week, as always, your top shareholder and analyst investor calls, as well as your top conferences for the week. As always, members, if you have a question or comment or wondering who is reporting during these conferences, reach out to us via Ask the Desk or shoot us an email. Your economic calendar for the week. As we mentioned, we do have some Fed speakers that are scheduled. We have a lot additional ones that are scheduled for interviews, and we'll see and report those in the news desk on a day-to-day basis. Check every morning on your breakdown to see what's expected. The busiest day we expect this week, members, it's going to be Wednesday and Friday when it comes to economic data. You got your CPI report at 8:30 a.m. and the FOMC minutes that afternoon at 2 p.m. On Friday, Thursday, as always, we do have the PPI final, but Friday we have retail sales, import and export, Fed speak, Waller, industrial production, consumer sentiment. Just a very busy week when it comes to economic and Fed speak, as well as earnings season, which begins on Friday. Your international top economic calendar, your Fed schedule breakdown of Fed speakers with their headlining in regards to what and where they're speaking, some week ahead commentary from the TradeX. Earnings for the week, as you can see, members, not much to begin in the week, but on Thursday we do have Delta Airlines, and Friday we have the beginning of the bank earnings. Fear and greed index, we are currently in the greed mindset. As we've been noticing, a lot of cautionary headlines, but the market still resilient the past week, and we'll see what happens going into this week. Weekly sector performance, we saw weakness in consumer discretionary and industrials, with strength in utilities and healthcare, as well as some strength in energy following that bump up in crude oil prices. NEC comparisons, as well as your sector percent move on a 5-day basis. Target rate probabilities, currently mindset is of a 50-50, 51% on a no move, and 48% on an uptick of 25 basis points. Year-to-date percent returns, NASDAQ continuing to be up top. Gasoline saw a little bump this week, up 13%, as well as gold and coffee. Coffee up over 10% year-to-date, saw an uptick about 8%. Also, we're watching crude oil with an uptick of about 6%, basically flat year-to-date. The weakness sign, members, continuing with that nat gas, down almost 55% year-to-date. Heating oil down about 20%, and the VIX down 15% year-to-date. Your AAII Investor Sentiment Survey, a big uptick, as well as you saw in that fear and greed mindset, a big uptick this week on the bullish mindset, up over 11% on the bullish side, and a huge downtick on the bearish mindset, down 10%. So the bulls are starting to take control. We've noticed that as of late because we're continuing to see this Fed commentary being hawkish, economic data being weak, yet the market is so resilient. We'll see what happens this week with those inflation reports throughout the week on the economic side. Sector outlook, communication services, information tech, and consumer discretionary continue to stay up top. The weakness, financials, energy, and healthcare. Your FDA calendar with your lockup expirations and your IPOs expected. Now a quick look at some charts. Gold. No changes to the chart, members. We mentioned last week how important that 2,000 level was. Tested numerous times. We broke above it with volume, hit a high of 2049.20, and ended at 2023.70. Downside support, this 2,000 is key. We're watching this if it gets tested, and if it breaks to the downside, we could see more bearish mindset, but if not, we continue to see the bulls taking control of gold. We'll see what happens this week. SPY daily, no changes to the chart. Last week, we mentioned a break back above 400 could bring on a bullish run, and that is what we saw. We tested, broke above 400, broke the downtrend. We did see not much action, as we mentioned, due to the holiday week, but the strength is still there in the SPYs. Watching these levels, watching the 400 downside and the upside basically right by resistance or on the 410 level. Watching the SPYs very closely. NASDAQ, no changes to the chart. We mentioned last week that resistance is key and to watch it for any conviction upside move to continue. What happened? We tested resistance once again, sold off, and ended the week at 12,087. We're still watching that 12,250 upside with volume on a conviction move and the 11.5 on the downside watch. That's on your NASDAQ. SPY daily on a moving average, MACD technical look. Same thing with your triple Qs, your IWMs, and your 10-year yield. 10-year yield daily, no changes to the chart, members. Last week we mentioned two levels to watch. 3.45% level to the downside and 3.6 level to the upside. Once we saw that break on 3.45%, the weakness ensued, and we ended the week at 3.288%. Now we're watching this downside support at 3.2, upside back above 3.45. Diamonds on a daily with moving average and MACD. IWM, no changes to the chart. Just look at this resistance test at the 180s level. This was, keep in mind, members, this was there. No changes to this chart. That level of resistance was there waiting to be tested. What did we see? A test and a sell-off. Ending the week at 173.89. With the CPI on tap this week, it'll be interesting to see if we break this 170 key support level with volume, or we retest the 180s, seeing an upside gap, members, as well as this downtrend. Will be very interesting to see what happens this week in markets. HYG daily on a moving average and MACD technical look. S&P 500 daily. No changes to the chart. We continue to build a trading base level around this resistance point. Watching 40.75 to the downside, 41.25 as a tradable range. Volume is key, but we are watching this very closely. And that all-important 4,200 level is still there on the upside. But that 4,000 level number is very key for the bulls to keep above that point. The bears are watching that point very closely for a downside move. VIX continue to be right at support levels. Watching this as well. Last time we were in this range, we did see an uptick, but we are watching this very closely on the VIX volatility index. Oil, no changes to the chart. What do we have here? A perfect technical chart. Upside move to test resistance at that $80 level. It's basically in the range that was there from weeks ago, members. So this level is being tested very, very strong. Closed at 80.49, watching the upside range, downside range. Now we have this pretty big gap to the downside. So we are watching this initial pop right here. If that level breaks on the downside, we could see a gap fill back to that support level. Watching oil closely. US dollar daily. No changes to the chart. The US dollar tested the 101.50 support level. The CPI report coming next week. We're watching this downtrend very closely with an upside break now at 102.50s. As the downtrend continues and the levels are not broken, this downtrend line level is continuing to the downside. So right now, around 102.50s upside for a downside, for a downtrend break. But we are watching for a volume move on the upside because it is a key level break. Bitcoin, no changes to the chart. Members, this is the same commentary as last week. We're in this range, watching this range very closely, and watching for any upside or downside move on these resistance support levels. SMH on your technical and MACD. And finally, your euro. US dollar daily. Basic, members, no changes to the chart. How technical has the euro been? A break above 109. Tested the 110's resistance, sold back off to end back at right at the resistance support line. We continue to watch the 110's resistance level as a key level on an upside move. We did add a uptrend this week to watch. If we break to the downtrend, could see a little volatility on a bearish side. Watching the euro closely as it does correlate with the US dollar, and going into the CPI report, members, it's going to be a very interesting week and could be a very volatile week. Even though we don't have any questions in the chat, since this is recorded separately due to the holiday weekend, we do, as always, have some questions via email in regards to our thoughts of the market. The market right now, members, in our mindset, is very resilient on the upside. We're starting to see more trends in regards to bullish mindsets rather than the bearish mindset that we've been seeing throughout the year. What we have always realized is if everyone is on one side of the direction, we always go the opposite. When everyone was bearish, you go bullish. But at this point, you're getting a 50-50 type of mindset right now. We did see some polls over the weekend on social media and some media polls in regards to the directional move in the market in the next couple of weeks to a month. Every single one that we saw, it was a 50-50 split. So the thought process right now is this is a toss-up. Before, when it was all bearish, you could easily see a nice upside move on the bullish as traders are thinking that we're going to see weakness. But as of right now, it's a toss-up. You're seeing 50-50 cross mindset in regards to a bullish run or a bearish run. You have numerous economic reports this week that could give you the opportunity in any direction. And then we have earnings. What are earnings going to be this quarter? What are earnings going to be this time around for the previous quarter? It'll be interesting to see any impacts in regards to financials, in regards to supply, inflation, the commentary by some of the big companies in regards to how things are moving forward, what the view is for the summer. So it's going to be an interesting quarter earnings. Pay attention to some of the big ones, as we always do. See what's coming out from Apple, Amazon, all the banks. See what's coming out on the streaming side in regards to Disney and Netflix. So it's going to be a very interesting earnings, very interesting week when it comes to economic data, and Fed speak will continue. The thought process, as always, since we did have that lackluster employment report, labor market continues to be so strong. The question comes down to, what is the Fed looking at? Is the Fed going to change its mindset? Are we going to get a 25 basis point and a pause? Are we looking at that going into the end of the year? And the question comes down to, what if inflation does not come down? If you have a situation where employment is still strong, economic data points are very weak, and inflation hardly budging, you're set in a situation where who knows what the next 3 to 6 months going into the holidays again could be for this market. We're waiting. Stay tuned, members, for any of these reports, the commentary by the Fed, because at this point, according to a lot of polls out there, the mindset is 50-50. And in that type of situation, with that uncertainty, we really do not have any possible directional move in this market. Members, we want to thank everyone, as always, for being a part of the Trade Exchange. Enjoy the holiday weekend. Be safe. Check the news desk throughout the weekend to get yourself ready for Monday's open. Thank you. Enjoy. Trade Exchange out.